What's up, traders? Nick Shaheen looking at Peloton. I think I've only done one video before, and that was last year, sometime here. Can't remember, but I did rewatch it to see what I said. And at the time, I took notes. Okay, I said I looked into fundamentals. I said it was 10 times sales, expensive but not crazy. Those are my words. The concept is very viable for convenience, people who don't want to haul their butts into the gym. And then the COVID hit. So the this comment here was so much truer than I knew back then. Also, we had just spiked, and it was coming off of the spike a little bit. And the clear line of control was somewhere around here, the breakout. And I said, giving it back is part of normal price action, and it would not be scary. In fact, this is the picture that I used. I took a snapshot from the video right now. We can see the rally, and I said it can come back to test footing, and then I drew this long ass. This extends all the way up to here. I cut it off. More on that I am. But it went up to here, so clearly new highs. I wasn't topping the market. In other words, I wasn't saying this was it, get out, it's too expensive. I'm not that guy. I'm trading the price action, but I also need logic. Okay, so at the time I said it's expensive, but it's not crazy, right? So that is still expensive, but it's a little crazier. Not so much from the concept, it's still viable. My neighbor has one, they love it. People who have it love it. I heard the stat that on average they use it 17.5 times a month, and they were on CNBC. Melissa mentioned that. She was flabbergasted at that. So that's working out every other day. It sounds high, but somebody who likes working out, to me, it's not surprising. But then averages are they kind of hide the outliers out there. You have tells the story, whatever that story you want it to tell, right? Some people work out every day. Some people work out once a month, if at all. So, but they are being used, and they're touching the client. That's the point that they were making. So I don't disagree with any of that. The concept is great. I can't believe that it hasn't taken off. It took it so long to take it off. And that's why there are so many competitors. And therein lies the little concern. Okay, Peloton has the name, but there's so many other cool competitors out there, and it's not easy to compete. And it doesn't need one giant competitor, death by 1,000 cuts type of a deal. So if you take away, some people love the gym. I love the gym. I love to go to my gym. I go to a fighting gym. It's a community. I go to see my friends. I wouldn't want to replace it with a Peloton ever. So the pool of Peloton users is finite. And so if you got a dozen other companies competing with it, even on a local level now, the local gyms are offering some sort of online thing. So it's going to eat away at its free ride, so to speak. But everybody can profit. So now let's talk Turkey. I mentioned that it was only 10 times sales, and I think that's double now. It's like almost 20 times sales. So what does that mean? In plain, simple English, it means that if you're buying the company, when you buy shares, you're buying the company, pieces of it, right? If you could afford the whole thing, you would buy the whole thing. So you walk up to Peloton, hello, Mr. Peloton, I love the company. I would like to buy your company. I will pay you 20 years worth of your sales today for the ownership rights. I'm paying you now 20 years worth of sales. You're paying, the stock price is 20 times its yearly sales, trailing 12 months. That's huge, right? I understand the growth. I don't know their growth, so do your homework on that and compare it to other growth companies. So Shopify, for example, grew 50% year over year. It's more expensive than Peloton from that perspective. It's like 60 times its sales. 60 years. And that's not the worst. Zoom is the worst that I've seen. It's almost 100 times. So you're paying 100 years worth of sales. I know they're going to grow. How much? Almost cost. How much extra growth do you think they're going to get in sales? Not user, sales. Okay. So anyway, Amazon. I keep referring. Amazon is 4. How cheap is that? Okay. I know the PE is high, but who gives a flying fart about the PE? They're growing 30% a year. Amazon. How much is this growing a year? Do your homework there. and then decide, okay, is it cheap enough for me to buy at 20 times its sales? Am I getting the same bang for the buck? That's one thing. So now the technicals, they're really cool. So it has pretty good levels. So let's talk tech. I don't know why that sounded weird. All right. So we will go with the obvious zone, failure, breakout, support. Perfect. Prior resistance becomes forward support. That's what you want to see. And this concept repeats itself. Here's another, whoops, man, I can't make a straight line. Long day, a lot of caffeine. So this concept right here, you can even see an inverse head and shoulders. The target should have been this eyeball. So this was the target eyeball. And it doesn't surprise me that this is another level of contention. It's not a hard line in the sand, but it is a zone, a base for this whole rally. Okay, so now we have a whole bunch of levels. This is one, and this is clearly one. In fact, this right here is the point of control for this whole season for this whole period of time that we're looking at on the screen. This is, this means that plus or minus here is where buyers and sellers were most active. For some reason, they loved it and they hated it the most. And in this case, it's more of a region from here to here. It's not just a hard line, because the hard line has several hard lines next to it, big lines next to it. So the zone is supportive. What does that mean? If it crashes, I would buy it with both hands. Okay, so that means also if I wanted to sell puts for income, I would aim to be somewhere down here, somewhere out in time. It means I can, if I'm holding it and it crashes into here and I don't have the chance to get out up here, I wouldn't rush to buy puts down here or sell it down here. Means everywhere below this, it's going to have buyers step in. Whoever missed it here is going to say, man, I missed it the first time around, let me get back in. Whoever missed it here, same. Whoever missed it here, same. Whoever bought it here and left it here and say, last time I bought it here, I made money, I'm going to buy it again. All this to say that if it does this, totally normal. So pick your level, starting point. I'm just drawing levels that stick out to me and match my personality. So each person is different. You can also say, okay, there's an ascending trend here. I'd like it when it meets that ascending trend line because I think it's going to bounce. That's what some people believe. I'm a believer of levels rather than trend lines, but trend lines do work in the right hands. So, okay, not a lot of lines here. Let's see if I have any lines already drawn. I do, not a lot. So I had a tight range right here, and I didn't know which way it was going to go. And I said, if it goes lower, I think it's going to find support. That's why I only drew one leg, and I put it towards the cluster below it. I said, if it breaks out, it's going to do it. It's going to run higher and in a jog, and boom, it met my target and then some. Earnings came and said, oh my gosh, we were so wrong. So now there's a base there, and I can put a box. So this is where eyeball judgment comes into play. This is the box I like for me. It represents the most for me. Then I said here there was a tight squeezing range. So the range went from this to that. A move is coming. I didn't know which way, but I knew something was happening. Guess what? It fell. Perfect. Into perfect bounce. I mean, it doesn't get much more perfect than this. They filled the gap perfectly. They touched the prior zone. It's the middle of my zone. Rallied. They stalled a little bit here. Two giant candles. My gosh, I wonder what happened here. And then off to the races. So this is where it's, if I'm looking to get long Peloton, there's no way on earth you would convince me to get long Peloton there. I don't care what you tell me about the company unless you're slipping me inside information. There's nothing you can say that convinces me to get long here. I should be man enough, person enough to admit that I missed it. It's too high to chase, too hot to short. So some people like to short it when it gets that high. It's a very sharp rising wedge, so it is vulnerable to dips, but you also have to know what the levels are that it will dip to. So if I were to highlight lines, so look at these, the cluster of dojis somewhere around here. So that becomes an interesting zone for me. So I'll put a line there to visually represent the action. So they weren't sure here, they weren't sure here, they weren't sure. 3 days of decent range and closing exactly the same place. And then this one hammer day where that was the base for the whole rally, where they said, we don't know, shit, we hate it. No, wait, you know what? We don't know, let's decide tomorrow. And then tomorrow, whoosh, this happened. So I like this line. Plus bottoms, 2 clear bottoms right there. So if it falls back to here, I bet you it finds buyer. So the first place I would buy it is close to 45. Same argument can be made for 47.50. So it all depends on your time frame and how quick, look at that, perfect, how quick you are. So this is where you have to know your trading patterns. Now I haven't gone anywhere near anything more granular than 1 day. So if I'm a fast trader, I should get down closer. So now I'm starting to see trend lines emerge. So the trick with trend lines is you can make them look whichever way you're biased. So if I start here, I'll come up with an interesting part somewhere around 49, 48, right? If I decide to, no, wait a minute, I should do it here, I'll probably come up a little higher. A little higher. So 51, 49. That's why I'm saying I prefer to see levels. Don't care. I know that if it falls towards 50, there's going to be buyers the first time around. If not 51, there'd be more buyers around 48. There's going to be a hell of a lot more buyers around 44, 45. And this is where I would say if we're lucky to get here, I would put an alert and buy the dip. And of course, I will evaluate the macro by the time at that time. So I'll buy the dip. This suits my time frame. There's another buy the dip here. Okay, so I'll put another alert. Buy the dip with a question mark because it's not for me, it's for somebody else. And you can argue for a base here, a buy the dip there. So these are all levels that stick out to my mind, my eye. Here, of course. Okay, so it depends on the speed. So now, speaking of speed, I can go down to 15 minutes and find different levels here. So clearly at the 15 minutes, now I see why the 51 zone is buyable, if not 49. All right, so now it's clearer. And some people trade intraday, then they have to look into 5-minute candles. I rarely get into 1-minute candles just because there are a lot of false starts. So on the 5-minute candles, you can see that even though it was it an up day for Peloton? It was an up day for the markets. Oh shit, it was. So if it was an up day for Peloton, the sellers were in charge of most of the day after they opened. So that's why there was a lower high, lower low trend. So if you didn't catch it in the morning, you spent your afternoon getting frustrated trying to chase a pop. Same thing happened with Apple, by the way. Super, super bullish day, but this phase of Apple, if you don't know technicals, you didn't know that leadership control switched hands from buyers to sellers. That's why every pop got sold into the close. Nothing bearish against Apple. But we shorted the S&P based on this and made money in the SPY in the chat room. By the way, there is a link to the chat room down below. So try it out. It's free. There is a PayPal front door to it, so I can protect my community, but it's a zero-cost transaction. So you have to know who's in control. And in this case, intraday, it's a different picture than even just the 15-minute chart. Higher lows, higher highs. Right? So clearly a bullish chart, but as far as picking entries, depends on the thesis. My thesis long-term is that this is overdone. It needs to breathe. I would rather buy it lower, and I bet you investors will have a chance of buying it somewhere around 40 to 45. When? I don't know. I don't care. I'm willing to wait. I'm not willing to buy a 20% missed investment, knowing fully that I can buy it 20%. That's like somebody saying, I love this car. I know it's going to be on sale in the next 6 months, by about 20% so I can save $5,000, but I'm still going to buy it today. That's childish. I'm okay skipping on that car and driving my jalopy. And I do drive a jalopy. Check this out. Check this out. Oh, you ask which one? I drive my son's toy car, which is a 1997 Grand Marquis, American luxury at its finest. Creep-ass mobile. So check this out. 50% retracement is this exact moment in time. This and that. And pretty damn close to this. No coincidences in today's markets, and I'll tell you why. So if you don't pay attention to the technicals, you're making a big mistake. They say, I can't prove it, 90% of all trading, 80 to 90, at a high percentage of all trading is done by machines. So machines can only trade using ratios and history. History is by looking left on a chart. Past. So at any point in time, you ask yourself, what happened here last time? So this rally from the bottom of March, the COVID crash, to the top of today. What is today? 23rd of June. Is this the second longest day in the year? Something like that. So this extension, half of it exactly is this point. This test was not a coincidence, and I bet you eventually they will test it again. And I wouldn't be surprised to see it happen. I'm not calling it a short all the way down to here, so don't go out and short everything in sight. I'm just saying that for me, I would rather sit out this rally to see where it's going to settle for me to find better entry points. Sure, if you're investing for the super long term and you're willing to wait for 10 years, this is a monthly chart. Oh my gosh. This is a monthly chart, but I'm not that guy. I'd rather see the results, at least positive results from the get-go. I hate to go into a trade knowing that there's a good chance of a red start. All right, Nick signing out. If you're not subscribing to this channel, I haven't said that in a while, do it. It's free to subscribe to this YouTube channel and put on the ding-ding notice to tell you when I post new videos. All right, Nick signing out.